Good morning, everybody. Welcome to the May 8th, 2025 ESS Finance Subcommittee meeting. We will go ahead and start with the April 10th, 2025 summary minutes. Everyone have a chance to review them. Any additions or corrections? If not, hearing none, I would take a motion for approval.
This is Sherry. I'll move.
Thanks, Sherry. I'll go ahead and second. All in favor, say aye.
Aye.
Aye. Amy in the chat, aye. Opposed, same sign. Motion carries. Okay, we'll go on to the financial reports. Accounts receivable update. Lisa, great job.
It's not me, it's all Samantha.
And
so
Samantha,
she's
great
the
job,
follow-up.
Samantha.
Yep. 0 is a good place to be.
Is that 2 months in a row?
I believe, yes, that it is.
That's great.
I know.
That's great. Okay. So I guess we'll go on to the May summary of ESS April payments. Samantha.
I did include this vendor list with the applicable accounts for each vendor. I also included it in the email if anyone wants it separately, or I can send it to you separately if you didn't receive it. But this is just a note and to help people track down where all these vendors are going in the accounts.
Thanks for doing that, Samantha. That's very helpful.
For accounts payable, I do have a few things highlighted here that we don't normally see month to month. The Denman bill, that for $7,000, we had our audit about a month early. Last year we had it at the end of April. This year we had it at the end of March. So they did bill us here, and they were farther along in the audit process than they were last year. So this was actually in the budget for, I believe, May and June, but it did hit in April because of the progress that they've made so far. So that's what that $7,000 is. The 9660, I think we had a little bit of a glitch in the system in 2 of Simplify's. Actually, I think it was 4 of Simplify's charges were double charged, and we were able to catch that. So we went ahead and refunded Simplifile, and then I believe it was Pot County that received the double money, and then we refunded Pot County as well. Tyler Technologies, highlighted at the bottom here. This also includes backfile processing, and then we had a little a date issue. So a whole bunch of extra documents went through the system in April that weren't supposed to go through. So what we will be doing a journal entry to move some of that back to the backfile reduction account. For credit card charges, everything you see month to month here besides the QuickBooks, which also is a monthly expense. However, it used to be $128 a month. They did raise their prices to $146 a month, so this will be the new reoccurring charge. I'd be happy to answer any questions on the payment reports.
Any questions for Samantha? Hearing none, seeing none in the chat, I will take a motion for the May summary of April ESS payments.
I can make a motion. This is Susan Smith.
Thanks, Susan. Do I have a second?
This is Sherry. I can second.
Thanks, Sherry. It's been moved and seconded. All in favor, say aye.
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 Opposed, same sign. Motion carries. Okay, moving on to the May Fund 255 reimbursement invoice.
Okay, May first Fund 255 reimbursement to the state treasurer's office did come in at $39,653.54. This is to help us with payroll each month. These are the 2 payroll invoices for April. Happy to answer any questions, or I'd asked for acceptance and approval to submit this to the state treasurer's office.
Any questions? If not, I would take a motion for approval for payment.
This is Mel. I'll move to approve.
Thanks, Mel. Do I have a second? I'll go ahead and second it. This
I
is
can
Stacy.
second.
Oh, I'm sorry, Susan.
Oh, no, you go.
Okay, I'll second it. All in favor, say aye.
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 Just waiting for the chat to catch up. Opposed, same sign. Motion carries. Okay, now we'll go to the March financial reports in the first quarter for 2025s.
Okay. The Bankers Trust checking account started with a beginning balance of $0 and an ending balance of $0. We were able to successfully reconcile the account for March. The Bankers Trust sweep account started with a beginning balance of $1,285,021.88 and ended with a balance of $1,260,692.26. Interest paid year to date is $3,995.08. For the month of March, it came in at $1,395.71. So this still isn't what we were expecting when we signed up. The interest rate did decrease quite a bit. It has went up a little bit. I think we were getting 1.2% that first month or two, and it went up to 1.3%, and now it's 1.36%. When we first were going to sign up, the interest rate was 1.8%. So we're seeing a little bit of progress here. This isn't exactly where we wanted to be. We're about breaking even with the checking account fees. But we'll continue to monitor it and see if we can work with Bankers Trust to see if there's maybe a better option to put our money into that would help more. The reconciliation for the Bankers Trust money market sweep account. And the drawdown account. All right, March profit and loss. You'll see that $1,395.71 for the money market interest income up above. And then we did have one chargeback come in the month of March as well. So that's what that $35 fee is for. Budgeted income for March came to $151,879.83, with revolving income at $3,228,447.59, with total income at $3,380,327.42. The Bankers Trust account analysis fee did come to $1,309.86. So we did make a little bit, about $90 in the month of March, but so we're not having to spend the $700 that we had to before with the just regular discount that we were getting before starting with the money market, but it's still not where we would like it to be. Budgeted expenses came to $106,813.68. And then a back file reduction did start back up in the month of March. So I do have that highlighted here at $5,212.68. Depreciation at $22,684.73. I am expecting this to just go up a little bit because we did move some money into the balance sheet as an asset. We're just waiting for the auditor to confirm those numbers. Revolving expenses at $3,224,116.40 with total expenses for the month of $3,358,827.49 with a total net income for March of $21,499.93. Budgeted only profit and loss, $151,879.83 for income. And expenses of $106,813.68 with a total net income of $45,066.15. First quarter P&L, total money market interest for the quarter was $3,995.08 with total budgeted income of $435,283.22 with revolving income of $8,670,837.24 with total income of $9,106,120.46. For the quarter, the bank checking account banking fees came to $3,385.36. So for the quarter so far,
About
We've-
$600.
yeah, about $600.
Mhm.
So normally that would be approximately $2,100. So there's an opportunity cost there of, $2,700.
Mhm.
Budgeted expenses of $334,048.20. The back file for the quarter came to $5,212.68. And then the AccuSoft Prism expense is also listed here. I believe that hit in February of $25,050. Depreciation for the quarter so far is $68,054.19. With revolving expenses at $8,659,548.15, with total expenses at $9,091,913.22, with a total net income of $14,207.24 for the month or for the first quarter. Budgeted only profit and loss. Budgeted income at $435,283.22. And budgeted expenses at $334,048.20 with a total net income for the quarter for budgeted only $101,235.02. I did prepare a first quarter look 2024 compared to 2005. Are you able to see that?
Yeah.
Okay.
Great.
This isn't in the packet, and I can put it in there and send it out to you guys if you'd want. But I just wanted to show you guys where we're at for the year compared to last year. If you can see here, POS fees. So we're up almost 50% compared to last year for POS sales. So that's
Excuse me, Samantha, could you expand the PDF a little bit? It's
sure.
fairly small print in that particular report. Thank you.
It
It doesn't
doesn't
have to
like
be
me, Bill.
perfect, but
Is that a
That's,
little
yeah,
bit
that's
better?
good. I think.
Okay.
You guys good with
Thanks.
that?
Is that better?
yes.
Yeah,
Okay.
thank you. Good job.
Okay. So compared to 2024, just for the first quarter, we're up almost 50% in POS sales. And then also the Lynn County OD sales, we didn't have very much at all at the first quarter of 2024, but you can see the fees that we've accumulated so far this year, and they're still going strong all the way through April and this first week of May. And then also ESUB submissions are also up 21%.
Lake County, that's their DNR renewals,
Yeah.
right, that they're doing. So it's boat renewals,
Yep.
yeah. Yep.
Yeah.
Sherry, they can use that for ATV as well.
Yeah, yeah, yep.
So total budgeted income compared to 2024 is up about 18.71% so far. And I can send this out if you want. I won't
Yeah.
cover or hit on everything in this, but total expenses, it looks like we are up just a little bit, 13%. And then for the total net income for the first quarter 2024 compared to 2025 is up 39.36%.
I like this. Thank you for doing that. I'm
Yeah,
a
you're
numbers
welcome.
Geek, so I really like it. It's like a little snapshot.
Yeah, and I can
Mhm.
send that out after the meeting.
That'd be great. Thanks for doing that.
A balance sheet for the for March 31st, BT checking account came in at negative $2,831.90. The real balance in this account is zero, but because we're accrual-based accounting, this number will differ. Oops, I'm sorry, $520,994.64. And then the money market sweep account, $1,260,692.26, with total assets and liabilities at $2,572,414.34. I did include the journal entries for March. These are mostly just the daily transfers from the money in and out of the checking and in and out of the money market sweep account. And then also the depreciation entry at the end of the month. The credit card had a beginning balance of $1,831.06. And the ending balance was $4,049.51. And the reconciliation for the credit card. The Fund 255 account had a beginning balance of $166,262.86, with an ending balance of $166,034.46, with total receipts matching the Fund 255 reimbursement of $39,653.54. And the profit and loss for the Fund 255 account. And the balance sheet for the Fund 255 account. I would be happy to answer any questions on the financial reports.
Very thorough, Samantha. Thank you. Questions?
This is Natalie. I do have a question kind of back earlier, the back file for Tyler. I mean, so is that when anybody is, I guess, uploading and sending their historical documents?
That's correct.
So where is that budgeted at? I mean, I saw it came from the reserve. Is that right?
There is a
Yep.
file reserve for, yes.
Well, it's actually not budgeted. Okay, and so the reason we have a backfile reserve is for processing older documents. So we set aside monies, and when we have, we don't have a back-to-back file every month necessarily. We accumulate them, and then we have a review of do we want to release those for back file and pay for those, and then we pay for it out of the reserve. We were sitting somewhere in the range of $50,000 in that reserve, and our goal was to get the documents processed and made public. So, we use it as needed. And if at any point in time we reach a stage where we don't have a lot in the back file reserve, then we'll come to you and ask you to move money from basically the operating account into the reserve fund. The issue that Samantha was referring to earlier is that there were some backfile documents that uh, incorrectly got thrown in together with some forward file documents, and they were charged as such, and then they ended up in the P&L statement. And then what Samantha showed you is that we really needed to pay for that out of the reserve, not from the budget, and so that general journal entry, is made for that purpose. So, any redaction or processing of older documents, that is, those that we would consider not recently recorded, we take care of that out of the reserve. So I hope that answers the question.
Yes, it does, and I feel I have sent quite a few out. I just want to make sure, is that what we are encouraged to do?
Yeah.
Are we wanting to send them?
We do not charge the counties for processing background documents.
I mean, I thought that kind of was the goal to get them all out there, and then I saw that
Yep.
expense, and I'm like, oh, well.
Yeah. No, we thank you for your contribution to the database.
Sorry, guys. No. Okay,
Yes.
thank you.
You bet.
Good question, Natalie. Any other questions from the group? Hearing none, I would go ahead and take a motion for the March and first quarter 2025 financial reports. Do I have a motion?
I'll move to approve.
Thanks, Mel.
Mel.
Do I have a second? Looks like Amy from the chat seconded. I'm sorry, Mel, did I cut you off?
Nope.
Okay, okay. All in favor, say aye.
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 Opposed, same sign. Motion carries. Next on our agenda is the audit update.
I think Samantha's pausing, waiting for me to jump in there. To me, it's just something that Samantha mentioned earlier, that we're actually ahead of schedule where we are at right now. The auditor typically comes back to us and asks for management comments on some of the data and the narrative that they put in the audit. I have provided those comments, but we prepared a draft. Lisa and Samantha and I reviewed them. Those were finalized and those have been forwarded to the auditor. So, according to what Robert has shared with us from Denman, is that they're very close to being finished, and we may have a preliminary audit to share with folks in the next 2 weeks even. So we'll look forward to getting that distributed. Really, no issues have been identified in the audit, and the schedule basically says it's not going to be soon enough to include in this month's reports or in the May ESS meeting, but we'll put it into the usual schedule of the August meeting. So an full audit report will be presented to you and then to the full ESS committee at the August meetings. I would just add one additional comment, and that is that there have been some statements made in the wind, so to speak, that a financial audit doesn't really count as a full audit, and I just want to declare that I really disagree with whoever has that point of view, because business issues, control issues, policy decision-making processes, those are all part of the audit. It's not just a review of the financial statements. And, I would say that the audits that we have annually performed, do look at our business practices and not just the financial statements. And we do take the audit very seriously in terms of identifying Any concerns in our controls and our checks and balances. Usually there's a new issue that comes up because auditing standards change from time to time, and then we have to accommodate that. That's all part of the normal process. So I just want to politely dispute any notion that somehow the audit that we're doing is incomplete or doesn't address policy issues or anything that you would expect in an audit. And our audit meets the same standard as would be performed for any local government like a county or a state agency. I want the members of this committee to have confidence in the audit process. And if you ever had any doubts about any issue like that, whether it's a control procedure or whether we're, appropriately handling a financial issue, I would want you to bring it up. And when the auditor contacts the leadership, they ask for the names of the governing leadership of the organization, and we initiate introductory communications for them with the auditor, so that if they had any specific concerns, they don't have to go through us. They can speak directly to the auditor. So I hope you all have confidence in the auditing process because we do take it very seriously. And I would just express the opinion again, the audits that we have are very substantive. I'll leave it at that.
Thank you, Phil. Any questions about that from the group? Okay, we'll go on to the maintenance and assignment of credits for 2025. I think Phil sent out the memo on page 159.
Yes.
Starting with that, okay.
Thank you. I'm not going to go through this full memo. Hopefully you've had a chance to see it. We originally distributed this on April 28th. I have this labeled as updated as of May 6th. And the main reason for that is that we updated a chart, did a slide update on a chart that we had previously shared with you. And really the update wasn't that significant either. But if you look on pages 161 and 162 and examine the data that's being shared with you there, you'll see in the lower right-hand corner of that we changed the label to say preliminary adopted February 20th, 2025. And what that is intended to mean is that in February, we brought this report to you and we provided it to the ESS Coordinating Committee, and it was approved, but it was conditionally approved with the understanding that it would be reviewed again at this meeting. One of the reasons we knew this would be reviewed is that we had contract amendments pending with the local service providers. Okay, and this is really some of the substance of the memo. So we would have ordinarily reviewed this with you again at this meeting anyway, but there is an extra reason to do the review now, and that is because we took a proposal to the ESS Coordinating Committee at their previous meeting and said, here are the templates that we were going to propose for the contract with the local service providers. And we had prepared not full contracts, but amendments to it. And one of the provisions of the proposed template was to change from a fiscal year July 1 to June 30 structure to a calendar year. And the effect of that is that it changes the nature of the maintenance payments to local service providers, and it changes the structure of the cost sharing, at least for this particular year. So just as a reminder to everybody, and I'm going to skip ahead. I would ask Samantha to skip ahead to the next chart, just to the top of the next chart. Okay, that's perfect. So because we're changing the term of the agreement with the local service providers, that also changes the term of the maintenance agreement. So the current maintenance agreements are going to expire on June 30th, 2025. And so there's only 6 months left in the calendar year 2025. The numbers are the same. The maintenance amount really is the same. It's just proportioned differently because the maintenance amount are not going to cover July 1, 2025 to June 30, 2026. It would only cover July 1 to December 31st, 2025. And that's basically half the year, right? So the amount due to the local service providers under the master agreement is half the usual amount. So we divide it by 2. And then the third column in the chart shows that if you're going to divide that actual maintenance payment by 2, we can divide the proportionate credit amount. So just calculated credit amounts from the prior period, and we just simply divided that by 2 for each county. And so this is also going to change the amount of the invoice. So for this cycle, the invoices to every county for maintenance expenses is going to be half of what it otherwise would have been, which I think most people would say is a good thing. But that's only temporary, because when the calendar switches to 2026, that is a new cycle, and we would be coming back to everybody and basically providing the service provider with their maintenance amount for 2026, which would be increased a little bit because of inflation. And then we would recalculate the cost sharing credits if we were to retain the credit program going into the future. So that whole process hasn't been finalized yet, but it basically means that if we still have a cost sharing program, and if we're still asking the counties to share in the cost of the maintenance with their local service providers, then a new cycle would begin in 2026, and the amounts would be similar to what they have been historically, except adjusted by inflation. This is sort of a sidebar, not really a part of the decision making today, but in the fee planning modernization process, one of the things that was discussed is the idea that that if the proposal that was developed was approved by the legislature and signed into law, that might provide ESS with enough resources so that we wouldn't have to bill counties for that ESS would just take over that maintenance expense in the future. Obviously, we today do not know what's going to happen with that, and that's a discussion for another day. So what we have to work with is the current law and the current situation. And so the recommendation to you is being modified from what was in February. And we have followed the formula that I've described to you. We have simply reduced the amounts by half. And that is what each county would be due. So in addition to that, one other thing has changed since the templates for the agreements with the local service providers were presented and approved by the ESS Coordinating Committee, and that is one service provider officially notified the ESS Committee that they were no longer going to participate in the maintenance program as it was defined by the contracts that we have. But they did state in their communication that they would continue to help their counties fulfill their obligations under the law, which would be in all cases today to participate in the Iowa land record system. So because they withdrew from the contract, that means that we don't have a contract with them. And therefore, we have no basis to provide them with payment for their maintenance services because we don't have a contract. And because we don't have any basis for making any payment to them, we therefore don't have any basis for invoicing the counties to share in that payment. And so those things that are highlighted in blue basically get zeroed out because we aren't paying the service provider and we aren't asking the counties to contribute to those maintenance expenses as we were before. I am passing no judgment here. That is just a fact. And so we're working with the facts that we have before us, and this is just how the math works out. The only reason I have Boone highlighted in a darker blue is that they currently are with another service provider. And if they had stayed there, again, I'm not commenting on that, then they would have been a participant in the maintenance fee and cost sharing program. But they are switching to the other service provider that's not participating, and that is, as I understand, is scheduled to be effective on July 1, and therefore they would be included in the same group. So a request for you today is to approve this modified cost sharing amounts for each county. And then once you, we'll take this recommendation then to the full ESS committee at their meeting next week. And if they were to approve it, then this is what we would base the invoices to the counties on. And this is the amount of cost sharing credits that would be assigned. So those are the two main things that have happened. We have changed the cycle for the maintenance agreement, and for this time and this time only, it's only going to cover half a year, and therefore the amounts are divided by 2. And then the other thing is that we have a change in status of a service provider, and that status means that they would not be participating, and their counties would not be participating in the cost sharing program. I'll take a breath. Happy to answer questions.
Questions for Phil? And I think it's warranted to say too that, so the amount that each county pays Iowa Land Records is Iowa Land Records then pays our service providers. So,
Right,
this is a fee. I mean, it can be confusing, but just
Yeah.
to, in simple terms, that this is, we get a credit for the amount of e-submission that we do, and then we then pay Iowa Land Records, who then waits for everyone to pay and then pays our service providers in one swoop, like Tyler and Fiddler, or not Fiddler anymore, but Cod. And so just so that's clear, because I know there's always confusion with that.
Okay, I'll say it again.
You can probably
This
say
is-
it better.
I'll say it
No.
again. This has historically been and remains a cost sharing program. And the idea behind it was we wouldn't have a system if we didn't have an integration with every county's local service provider. And we have viewed it from the perspective that the work that those local service providers do to maintain this integration has value, and they deserve compensation for it. And this is the way we came up with the means to pay them. As things have grown, as things have become more expensive, we have asked the counties to share in the cost of those maintenance services and those payments that we make to your local service providers. And then we devised several years ago a kind of a program where we wouldn't ask counties to pay 100% of that cost, that we would contribute to sharing in that cost. And we tied it to an incentive to encourage e-submission. So nobody should have the impression, or I want to dispel the impression that somehow the monies that we invoice the counties stay with ILR. They do not. We provide that income to your appropriate service provider in recognition of the valuable services they provide. Thank you, Stacy.
Yeah, you're welcome, Phil. So any other questions? Thank you for the explanation too, Phil. I think we can just do it in one motion. So I'm asking for a motion for the maintenance and assignment of credits for 2025 as presented today. Oh, Aaron has a comment. I'm sorry, I just saw the chat.
I don't have an answer to that. I do not. I just have to say I do not agree with that perspective. The service providers are doing extra work because they're asked to participate in the ESS, and that's the way we've done it. And I am not suggesting that the way that a particular service provider is choosing um, uh, uh, to participate um, is right or wrong. That's a choice that they made.
Okay, thanks, Phil. So let's go back to, does anyone else have any comments or questions? I apologize. I didn't see I moved my chat over to my other screen to see the blown up financial stuff on my one screen. So I apologize, Aaron. I didn't see that at first. Okay, hearing none or seeing none. I'll take a motion for the maintenance and assignment of credits for 2025.
This is Mel. I can move to approve those.
Thanks, Mel. Do I have a second?
Susan
Amy.
Smith.
Oh,
Okay, go ahead.
sorry, Susan. Amy
No,
beat
it's
you to
okay.
it.
I'm
Amy
slow
was in the
today.
chat. It's been moved and seconded. All in favor, say aye.
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 Amy and, it looks like Kelly in the chat. I said aye. Opposed, same sign. Motion carries. Okay, we'll move on to the calendar year 2025 budget amendment.
Yes, but before you move on,
Oh.
just want to ask my note taker, sure, did you get the identity of the person who moved and seconded the last motion? Is there?
This is Lisa. I have Melissa as moving, Amy as second. And a quick comment that as in previous years, we will send invoices to the counties probably in June. So you have an option to pay all or part in this fiscal year. If you have any questions, you know where to find all of us.
Yeah, thank you for
Thank you,
clarifying that.
Phil. Thank you.
Okay, for the purposes of the discussion about the budget amendment, I would direct you to the memo that's included in your packet. And I would just say that, you know, the introductory paragraphs are there to help explain how the budget was constructed, what some of the main issues were, kind of where the balance comes in, and then some hints about, you know, how to read the color coding. Okay. And then below that are a series of bullet points that are divided into categories of income and expenses that are of interest in the budget. So I encourage you to maybe keep that handy. But I'm going to ask Samantha to actually share the budget itself. Okay, so again, I'm going to walk through the entire thing here, and this may seem tedious, but I want to make sure everything is explained. So first of all, as far as the color coding, anything that is in the burnt orange color is basically a change from budget to actual. And for the most part, we really don't have anything in particular unusual to report in that regard. Then there are items that are listed in gray, that are highlighted in gray, and those represent changes from the budget that was approved, the budget that was originally approved, or changes in the budget as amended at your February meetings. Then there are some items that you may see in light blue that are representative of actual numbers because we know what they are, but those financials haven't been reconciled yet. So we're not converting those to actual until we go through the reconciliation process. If you go completely to the right, and I'm going to ask you to scroll down to the next page, Samantha. Oops, one more. Okay, you'll see some things that are highlighted in a light purple. And the purpose of those highlights is that those are things that change in February. Okay, so you did three things in February. The first is you authorized us to convert Nancy's developer position from part-time to full-time. That change was made, and the numbers for the adopted 2025 budget were changed to reflect that. So I just want everybody to be aware that that is baked in. The other thing that was baked in to the comparison with the previously adopted budget, we moved two things from the budget into the reserve accounts, and we were just going to pay for those with reserve. And our charge was to, as we go through the year, if money is available, we'll move those back into the budget. Okay, so those are two things. The one was the license for the DB2 software, and the other is the license for the Prism imaging software. Okay, so let's go back up to the top, Samantha. Those are the main things you should be looking for. And if there are other highlights, I will certainly call those out as we go forward. So looking at May and looking at the revenue side of things, one change in the budget that was not fully recognized in the original budget that was adopted, but it is now included, is any income we received from the money market account from Maker's Trust. If you go back and look at the February or the November 2024 numbers, we weren't doing that at that time, and now we are. So the income from that is now recognized as a part of the budget. And based on our experience thus far, we hope it gets better, but being conservative, I've incorporated a value of $1,300 a month as estimated income from the money market account. We hope it is better than that, but that seems to be a reasonable estimate from my point of view. The next line down, conference registration. As a staff, we are recommending that we defer this year on the deputies conference. I would just say that from a staffing perspective, by the time we get to September, we anticipate that we're going to be stressed a little thin. And so we're just going to defer on doing that event this year. We are planning to try to organize some specific webinars for the deputies. And we can do that within our current budget. As described in the memo, I'm on the line relating to the total service fee for each submission. I think it can be fairly said that we've had a very good quarter so far this year. Numbers have been up and unexpectedly up, given the turmoil in the economy and kind of the state of the real estate sector. But despite those challenges, recording activity has definitely been up, and it is reflected in the income. And if you look at just kind of where we are, we're about $23,000. I'm sorry, we're about $35,000 above our original projections in income for the service fee for e-submission. We are not getting unreasonably enthusiastic because of that. And basically, the numbers that we're looking at do show a modest increase, but basically, in some cases, I've actually reduced the projection numbers for the period of May through October, just to reflect that we just can't be overly optimistic. There are too many factors in play, and we need to be relatively conservative for that. You know, the reports I've seen are that really haven't yet seen the full effects of the tariffs on the economy, and so we just have to be reasonably conservative in estimating income. So we'll take the benefit of having a good quarter or a good 4 months, January through April, but and basically I'm keeping the numbers down in the remaining months to be as realistic as we can. You'll see that basically I haven't made any changes in the projections for point of sale income, but obviously the first 4 quarters for point of sale have been fairly good too. Our gateway payment expenses have gone up too, so that does temper the amount of benefit we get from higher point of sale activity. So the item that's highlighted in blue, which is part of the Fund 255, that's blue because we know the number, we just saw it, but it hasn't been reconciled yet. But for the remainder of the year, I'm not making any adjustment in the projections for income from Fund 255. Then the next 2 lines down is a reflection of the changes that you just approved in the cost sharing program. So the amount of the cost sharing credit is going down, and so is the local maintenance share. And we're estimating that for the 6 months that the cost of the services of the local service providers is $142,000. If we were going a full year, it would be somewhere in the neighborhood of 286. And that does take into account those counties that are their service providers not participating in the contract any longer. So the effect of that is that actual taking everything together and the adjustments that revised projections for total budgeted income are reduced from 1.785 million to 1.765 million, about a $20,000 reduction. And I think that's sort of where we want to be. We started out the year conservative. We're going to go into the next several months from a conservative posture on the revenue side. Any questions about the changes in revenue? All right, then I'm moving on to the expense side of the equation. And again, I'm just going to go down the list and talk about the changes. So the first item relating to the annual audits, what they refer to as their progress billing, the number was up in April, but our overall cost is not going to increase. So instead of paying $5,000 in July at the conclusion of the audit, we'll probably get a bill. We will get a bill for $3,000. And then the $2,000 amount to pay for the association's 990 return is still in the budget. So it's a change, but it's a change in cash flow. It's not a change in the amount. The next line down, As I think Samantha noted, we do see some increased costs in our accounting software and our use of RightWorks. And so I've made a modest adjustment there to reflect that increased cost. So the next line down primarily relates to the personnel costs associated with our accounting position. So in a separate message, I provided you with a summary of the recommended personnel compensation changes that I would make that would begin in the month of June. And it's intended to reflect compensation changes, given the fact that several of the staff have not seen a compensation change in almost 2.5 years, and that one staff person has reached their anniversary date, and in a normal year, it would be appropriate to consider a compensation change. And I have included those in the budget. So the first one that appears relates to the accounting position. I would just note that the numbers for those items in May and October are higher because we do biweekly payroll, and in those particular months, there are 3 payrolls, and that's why those numbers are higher. Moving on down, I'm looking at the line that is there for insurance, and the insurance number this year is a little over $45,000. Samantha and I and Lisa, actually mostly Samantha and I, met with our insurance broker yesterday to kind of go over the final numbers, and I'm comfortable with this number for our insurance expenses for this year. We're probably actually going to come in a little bit lower than this when we receive the final bill. But we did see an increase in insurance expenses this year. It was not a big jump. We're fortunate about that. But this is a reflection of our estimate about what our insurance premiums will be. At a future meeting, we can go into details about what insurance we have, but basically we have liability insurance, we have directors and officers insurance. The big items in our premium expenses are errors and omissions and cybersecurity. Those are the things that really cost money in this day and age, especially if you're running a website like ours. Moving on down, the telephone line item, a modest upward adjustment in our monthly expense for telephones. If you're curious, we have VoIP or Voice over Internet Protocol phones for some, but not all of the staff, primarily those who provide customer service functions, and that is a service agreement that ESS has independently of anything in our office. So a small increase there. Our communications coordinator position, again, to reflect those compensation changes that I referred to earlier. The highlighted item under our conferences, that's just the other side of the deputy's conference. So we've removed the income and we've removed the expense from the budget. Everything else is basically the same under marketing, communication, and education and outreach. There's 2 positions in our customer support area. Those 2 are included in the compensation change adjustments and the same basis that I described earlier to reflect those increases. The next one that merits attention is the development team. So what's happening there? Well, as I mentioned earlier, one of the things that we did earlier this year was move Nancy from part-time back into full-time. She was full-time and then she requested to be adjusted to part-time for family issues and reasons. But then after a certain period of time, she said, I'm ready to work full-time again. So we made that change. So really the only changes really there are cost projections. It's not much different than what we had projected in back in February when we moved her into full-time. There is some adjustment there, but not a lot. The big change is that for a period of time, we will not have a third developer position. And the reason for that is because we are proposing to promote Myrna Addison from the technical support and development position into the technical lead position. And that is a recommendation that I will be presenting to the ESS Coordinating Committee at their meeting next week to give her that promotion. The promotion is going to provide for a compensation adjustment. It basically is going to be built around what the technical lead position is. If you're going to ask, well, why is it a number higher? It's because the person previously occupying that position really did not take advantage of our benefit system, that they were using another family member's benefit system. But in this particular case, our technical lead will be using the insurance benefit system, and that results in a little bit higher expense. So why are we leaving the technical support and development position vacant? I would just say this is not a good time to go into the marketplace and hire somebody into a new position. There are lots of reasons for that. You could say the economy might be one of them. There are other reasons that might make it difficult for us to recruit into this particular position. So in lieu of that, we're proposing to do two things. The first is if you go down to the line that is labeled technical consulting, and maybe Samantha could highlight that a little bit. We have made arrangements subject to the approval of the ESS Coordinating Committee to contract with our previous technical lead, Kelly Wallace, to provide technical assistance. This isn't a part-time job. This would be more like phone a friend to help us do troubleshooting or to do some technical assistance that would help with the transition. The loss of Kelly from our team is a big loss. I do not want to suggest that we don't have confidence in the person we're promoting, but it's pretty big shoes to fill. And so we are proposing an arrangement with Kelly that he has agreed to make himself available for several hours a week to work on something specific or to consult on something specific, usually off hours, that is after the usual business day or on a weekend. And so we feel I think it gives everybody a little bit of comfort that it's not going to be a cold turkey break, that we're still going to have access to him. His departure has no reflection on his opinion about ILR or his desire for us to succeed. It's just a different time and a different opportunity for him, and we're happy to keep him in the fold. This is not a long-term arrangement. I'm anticipating that it will last through the end of the calendar year and probably end after that. It may wind down sooner than that, depending on how things go. Then on the other line, the line up under software development services, given that this is not the best time to recruit a developer, in my opinion, I would propose to allocate some substantive resources to third-party outside services. We do have master agreements with companies that we have previously worked with, Lean Techniques and We Write Code. We have not defined a scope of work yet, and I don't have a work authorization yet prepared for consideration by the ESS Coordinating Committee. But I anticipate that as we get deeper into this month and then into June, that we will be able to give them some work to do for some priority development activities to be determined. So while we may have the loss of a full-time position, we will have the benefit of some very capable people to help us get some things done as necessary. I'll open it up for questions as we get, but the rest of this won't take too long. The data center and hosting services, as you know, last year we migrated to the cloud with Light Edge and Altoona. Those costs are going to be going up slightly. I wouldn't characterize it as a surprise, but it is a little bit higher than what we were paying for previously, and mostly that has to do with their license expenses, their energy costs, and so on are going up, and we would have anticipated this. So I would look at that as more of an inflationary adjustment more than anything else. Coming down to the category of software license and maintenance, because we had a good first quarter, we think now would be a good time to go ahead and move that license expense out of the reserve fund and back into the budget. So the actual cost of the license this year was $25,050. It's something that we paid for, and all this represents is Samantha making a journal entry to move it from the reserve back into the budget. There's one other item that we moved to the reserve that I'm not making a recommendation on today, and that is about a $12,000 expense for our IBM DB2 database license. I want to do that. I'm planning to do that, but I'm giving ourselves a little bit of wiggle room by saying, let's take a look at that in the August meeting. And we may do a budget amendment at that time if resources are available. And it's certainly my full plan to actually do that. But I'm going to recommend that we defer on it at this time. Moving on down, Microsoft, we've experienced basically a modest inflationary increase from Microsoft for our office operation software and our email accounts. SUSC, we have been in the process of migrating away from the use of SUSC as our Linux operating system software. And Kelly was engaged in that project before he left, and unfortunately, it wasn't completed by the time he had to leave us. It is still a project that we want to do, but in the meantime, we're still likely to have to use the SUSC platform for a period of time, and we're going to have to pay for the licenses associated with that. So that needed to be put back into the budget. I would say that one of the projects that we may ask Kelly to perform under the agreement is to complete that project as we go through the end of the calendar year. So details on that to be worked out. The next item down is related to the acquisition of computing devices for Manson and Myrna. The devices that they're working on are about 5-6 years old. They're no longer supported by Apple. I think Kelly was trying to be prudent and defer the purchase of new devices until next year, and I commend him for that. But after review with Manson and Myrna, I think it is prudent for us to go ahead and secure new devices for both of them to perform their development work. So there's $10,000 budget proposed in the budget for that. Those devices are not your devices that you buy off the shelf at Best Buy. Then moving on down into the local maintenance expense line item. I've previously talked about the idea that maintenance expenses in terms of what we will be paying the service providers is about $143,000. So that sort of pairs up with the item that is in the revenue side of the equation. But we are, obviously, we just need to pay for that expense. So that needs to be a part of the budget. And so that number has changed since we put the budget together originally. There is a new item, however, that I'm recommending that we include, and it is a $40,000 item that hasn't been in the budget before, but I think it is necessary, and that is, I think we need to be prepared to offer some supplemental compensation to two service providers who currently only serve one county each. And their recorders definitely want to keep those service providers, and in order for them to be able to succeed, they need to be able to integrate with the updated version of the ESS APIs. So we are entertaining discussions with each of those service providers as they work on integration with the API. Other service providers who serve multiple counties just have the bandwidth and the capital because of the fact that they serve more counties, the income they receive from those counties and also from ILR is at what I would consider to be a critical mass to say, hey, we're paying you to provide maintenance services, and that includes updating to the API. Well, when you serve only one county, that's tough to do. It's a big pill to swallow. So what we have said to each of the service providers is, tell us what you need. Tell us how we can help you. Come to us with a reasonable proposal, and we'll see what we can do. And I think it would be a fair request to help those service providers because if we don't do something similar to this, we may be essentially closing them off to the market, and that just doesn't seem to be right. So I am recommending that we allocate $40,000 out of the amended budget for that purpose, with the understanding that we haven't finalized any agreement with them, either of them. We may or may not need it, but we at least want to be in a position to help them succeed and not block them from participation in Iowa, or to force them to abandon those counties that would very much like to keep their services. So that is a new item, and I have accommodated for it in the budget. We're almost done with the overall summary. So as Samantha was talking about earlier in the in the conversation. The bank account analysis fees have been a little bit higher than we were doing before because of the change. And right now we just are a little bit out of balance. We would prefer to be in the positive column in terms of having more interest income than our analysis fees. But to be fair and conservative, this is what our average estimate is expected to be for the remainder of the year. Hopefully we get a higher interest rate as we go deeper into it. I guess I'm gonna also say that I'm not as apologetic for this as you might think, because we're still better off with the money market account from a net perspective than we were not having it. So even though we aren't in the total plus column, it's still better than just paying the bank account analysis fee with no interest income, which is where we were before. The adjustments in the online transaction fees, which are under the general category of gateway transaction fees, and then there are two separate items, and they're both related to e-submission. One is associated with professional solutions that provides our online credit card payments, and with Vericheck that provides our ACH payment system. Those numbers have been adjusted a little bit. They particularly the professional solutions credit card numbers are higher. Mostly that is because of a PCI compliance charge that was not fully disclosed when we entered into the original agreement with them. And we've had a number of discussions with them, and they have agreed to basically provide that at their cost. So it is something that was not originally anticipated, and it does increase our cost, but it is something that we need to do. Companion with that is what we'll be working with them to maybe make some changes in our process to change a few things in the system that might reduce our costs for that going forward. I have not made any changes in the estimates for the point of sale transaction fees. Generally speaking, our cost for the point of sale gateway and transaction fees go up and down as activity with the credit card system changes. And it is a net positive for us. I don't have any reason to change the estimates for that at this time. So with the changes, the original expenses projected in the last budget action was 1.782 million, and with the revised projections, our expenses would be 1.720 million, which is an estimated overall $62,000 reduction on the expense side. And as far as the comparison of net income, with the amendments that were made in February, the projected net income would have been $2,835.22. With this revised budget amendment, the net income would increase to $45,018. So it's about a $42,000 upward swing in our net income. And I hope the party that we've seen in the first quarter continues on, because that will improve those numbers. But I think we've tried to be conservative on the revenue side and on the expense side to get us into a position for a fairly good period of time between now and August. Ooh, sorry about that, but I wanted to make sure we covered everything. I'm happy to answer any questions.
Very thorough, and you went line by line along with the memo that you sent, so I appreciate that. Comments, questions from Those in attendance today. I heard on the TV news yesterday morning that the way that they describe our economy and the tariffs and all this is called strategic uncertainty. And I thought that was very appropriate. But I think being conservative, like we always have been, right, Phil? I mean, when we do our budgeting and the amendment, I think right now, I
I,
don't have any concerns or heartburn with the amendment
I,
where we're headed.
I would, kind of just observing and listening to, how people think. Um, okay, yes, 1.7 million is not a small number. You would think, okay, can't you do everything you need to do with that? Um, uh, when you put a budget together, you say, what do you need to have? I looked at our team, particularly our development team, and I would say in terms of what we deliver for the resources that we have, we're pretty thin, um, pretty thin team, spread very thin. We're going to be even with the outside help, we're still going to be thin, and there's a reason why the proposed revenue increases were included in the legislation is because, to really get to the next level, new resources are necessary. Um, so I feel like we justify the budget that we have, even though it seems high, and I think we can justify why it needs to be higher to get us to where people want us to be.
Mhm.
Well,
Aaron,
I'm gonna just respond to um the comment in the chat pod. Generally speaking, it is the purview of the ESS coordinating committee to make personnel decisions, um, and it's the purview of the finance subcommittee to oversee the finances. So this is the action that I'm asking the finance subcommittee to take today is not the final action. If there's consideration about whether to proceed with the recommendation to fill the technical lead position or to consider other positions, that's where that conversation needs to be. I I appreciate the comment, but I absolutely stand behind the recommendations for the team. I would say there's every reason for the finance subcommittee and the ESS coordinating committee to do what they can to keep the core team that you have together. Um, it would be a serious mistake not to make every effort to do that. So ESS and Iowa Land Records is not. We're not a county. We're not a small county. We're not a large county. It's a different animal, and it takes a different set of resources and tools to get things done.
I'd also like to comment, Phil, to Aaron's comment about last year, the 2.95% increase. Looking at the ISAC salary for FY 24, the average was 6.12% increase. And then for FY 23, the average was 5.12%. So considering that some of this, our ILR team hasn't had a raise in 2.5 years, you need to not only consider the current fiscal year that we're in, but the previous 2 years with inflation at 7% coming out of the COVID crisis that we had for the couple of years. So I think it's really not a true statement when you're only comparing one fiscal year. You need to go back and look at what the state average was for our county recorders through processing that, and that is my opinion. So any other comments from the group? Questions for Phil or the team? If not, hearing none, I would go ahead and take a motion for the calendar year 2025 budget amended as presented.
This is Mel. I can second Amy's motion.
Oh, thank you, Amy. I did not see that.
It just popped up at
Thank
the
you.
same
Thank
time.
you. So Amy moved, Mel seconded. All in favor, say aye.
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 Aye. Opposed, same sign. Motion carried. Thank you, Phil, and your team for all the explanation as well. Anne just echoed that as well. So thank you. Okay, we'll go on to the next bullet point is the ESS financial and strategic review.
I'm gonna be really quick. I appreciate everybody staying overtime here. This is just the monthly chart. It is great to see the April number jump and ship a little bit over 2022. We haven't seen that in quite some time. So we're happy to be on that trend line. But again, I think, if you look at the course of the year, most of the experience that we have follows a general trend from a calendar perspective. June is usually the peak time. We certainly hope it continues to follow that trend. But we also have to realize that things do taper off at the end of the calendar year, and we try to budget according to that. Skipping back up to items that are on the agenda. Some of these I've already talked about, but I'm just going to go through them again. If you look at the bullet points under the heading pending potential organizational actions, and go through each. So the local service provider contract supplements, those relate to those two counties I was talking about, those two particular service providers. I do not have a specific recommendation at this time. All I can share with you and be transparent with you about is that there are discussions being held with those service providers, and we'll just have to see where it leads. If we need to, we will take up the specifics at a future meeting. Certainly, it also has to have the ESS committee approval. The 1099 technical services agreement, I do have a draft ready. It will be on the agenda for the ESS coordinating committee meeting next week to enter into a technical services agreement with Kelly Wallace. That's what that is. The paycheck 1099 payment service agreement, we were talking about how are we going to handle the payment under that agreement. Samantha and I have talked about that. I think we're going to be able to do that internally. So I'm not anticipating a separate contract on that. The appointment of the ESS technical lead. You haven't seen this because it's a personnel issue, but I am making a recommendation to the ESS coordinating committee to appoint Myrna Addison as our new technical lead, and it will be within the budget parameters that you just acted upon. The ILR staff compensation adjustments we just talked about. I don't expect any changes from the information that I shared with you earlier as a part of the budget discussion. And then the technical services work authorization, that is anything that we would do with rewrite code or lean techniques. And again, we are in the planning stages talking about, okay, what would we want them to do? What would the scope of work be? What would be the budget for those? Those would get translated into very specific detailed work authorizations that we would present to the ESS coordinating committee. It would obviously have to stay within the budget parameters that you just recommended, but it would be a contractual issue. Just so you know, we already have master agreements with both of those companies. Those two companies were selected through a competitive RFP a few years ago. Those contracts are still valid. So what we would do is we would create a work authorization that says, okay, here's project X, here's what the deliverables are, here's how much we're going to budget for it, and we'll follow the same process that we did the last time that we had those two companies do work for us. But many, many, many more details to come on that before we go forward. As far as the last bullet, the recording fees and modernization update, you know, I think the association and the ESS leadership, you know, have communicated their desires to the folks over in the Senate, and I cannot make a prediction for you about what will or will not happen. I think one of the main things that everybody has to keep in mind is that while the Bar Association and the Realtors sort of gave their blessing, the Bankers Association has not. They're still very concerned about the level of the fee increase, and they still have something to say about it, and that will probably happen on the Senate side. So if I were to identify any one hurdle that has to be overcome more than anything else, it is will the Bankers Association support anything? And we don't know the answer to that. So that's my update. Stay tuned. I'm sure that Stacy and Megan and Lisa Kent and Ann, you know, as those things unfold, they'll be getting communications out to everybody. That's all I have. Thank you so much for your extra attention today.
Anything else for the good of the cause today, guys? I appreciate everybody attending. Our next meeting is June 12th at 9 o'clock. You guys have a good rest of your day.
Thanks, everybody.
Thanks, everybody.
Thanks. Have a good day.
Thank you.
Yep, thank you all.
Thank you.